Hello, welcome to this week's Forex Outlook here at xm.com. My name is Rafi Boyajan, currency analyst, and here with me is our chief economist, Michalis Florenjadis. So Michalis, trade war has once again been dominating the headlines this week, though we did see a bit of a retreat in the US dollar. Today was a highly anticipated day because the US, the initial amount of 34 billion announced by the US came into effect, though there was relative calm in financial markets. So what were the highlights of the week?
Yes, Rafi, this is very interesting what you say because I think some in the market had been hoping that maybe before today there would be some kind of agreement to, let's say, not let hostilities progress any further. But even in the absence of such an agreement and the tariffs going into effect, it seems that the markets are holding relatively well. In fact, it has been a green week for stocks, so more or less, despite the tremors or the nervousness that we saw, stocks managed to close the week a little bit higher. And today we have a broadly risk-on mood, despite the fact that a very threatening trade war is looming on the horizon. And now, with respect to currencies, the dollar we saw some profit taking in the dollar, so that was a little bit weak during the days that passed. But also, we had the euro being boosted by positive developments in Germany, where a challenge to Merkel's coalition seems to have died down for the moment. The situation is looking a little bit worrisome still, but that doesn't seem to be an immediate threat to her government. We also had positive German data. Also, we had good data out of the UK, which boosted the pound. And we also had relatively, I wouldn't say hawkish, but optimistic governor of the Bank of England, Mark Carney. And the Brexit news were not really affecting the market all that much. So overall, it was a positive week for the market. Now, having said that, what do you see next week? What should we be focused on? Are investors going to be watching trade developments mostly, or are they going to get some important economic data and maybe something from central bankers as well?
Right, well, for sure, trade will likely remain in the headlines. This week we had some hope that the EU and the US will manage to reach a compromise on auto tariffs at least. So if we do see further signs of various parties seeking a diplomatic solution, we could perhaps see the risk on we saw today extending into next week. It's going to be fairly quiet though in terms of data. We will have Chinese trade numbers, which will give us indication of Chinese exports in June. If we do see a weak number there, perhaps that could raise some concerns in the markets. We're also going to have Chinese inflation and producer prices. The US, we're also going to have consumer and producer price indices out of the United States as well. From the Eurozone, the focus will be on the ECB's minutes. There was some talk this week that some ECB policymakers weren't happy about the market pricing of the rate hike being as far back as December 2019, and they hinted that September, October was a more likely date. So if we do see further confirmation of that in the minutes, the euro might be able to extend this week's gains. UK is going to be an interesting one because we're going to have monthly GDP numbers being introduced for the first time, and given the expectations for an August rate hike, that could be significant in that respect, plus the usual industrial production and manufacturing numbers as well out of the UK, in addition to the GDP figures.
So the UK joining the ranks of Canada in publishing monthly GDP numbers. We also neglected to say that the fact that the ECB took the bother to say that it's not very happy with the market pricing of a December hike, but this is going to happen in September. And the fact, of course, that we are talking about a year plus ahead, so that this is a very long-term call by the ECB to fine-tune this kind of interest rate increase, trying to signal it from now. But also, I agree that maybe the volatility is going to be driven by trade headlines, but especially it could be positive if we see some more meat around this proposal that actually auto tariffs would be dropped on both sides of the Atlantic. Such a development would be quite positive and show that the Trump administration is willing to make some compromises and on certain trade issues. But of course, we'll have to see about that. Thank you very much, Rafi. Thank you everyone for watching and have a great day.